Hello, everyone, and welcome to the Caribbean Energy Webinar Outlook. Before we begin, a few housekeeping notes. So first, the webcast is recorded, and we will be emailing the recording of the slide deck to all registrants and attendees. Also, you can use the widgets on your console to interact with us. For instance, you can submit questions anytime by hitting the purple Q&A box. We will answer questions at the end of the presentation, but feel free to submit a question anytime. And for technical help, click the yellow box, the yellow question mark button. There are other resources and helpful tips on the console buttons as well. And a quick note about Refinitiv. You may already know us. We were formerly the financial and risk business of Thomson Reuters. Our team presenting today are all part of Refinitiv, which is one of the world's largest providers of financial markets data and infrastructure. To learn more, please go to refinitiv.com. And now to introduce our wonderful panelists. We have Corey Stewart, who is a senior energy analyst on Houston's oil research team, where he analyzes nascent trends in the Western Hemisphere's crude oil and refined products market. He is also the co-creator and co-host of Refinitiv's popular podcast, The Rundown Tank, America's Oil. We also have Michael Sermon, who is a proposition sales specialist for Refinitiv. Focused on commodities, Michael brings his trading background, product expertise, and market insight to provide holistic desktop data feed and related solutions to the global investment banks, oil majors, NOCs, hedge funds, international trading organizations, manufacturers, retailers, logistic companies, and other physical and financial market participants. So with that being said, let's move on to the presentation now. Hi, Corey. Any opening comments before we get to the questions?
Hi, Tanisha. Yes, absolutely. So we've had an increasing number of clients and companies interested in Refinitiv's offerings and ask us about Caribbean energy, from both the crude oil, refined product side, also some green questions too. So as you know, that's what sparked this discussion here today. But let me go ahead and set some expectations. So what it's not, we don't have time to do a supply, demand, balance, and forecast for every country in the Caribbean. For one, there's just no story there. And two, I'm making the assumption that our listeners today want to hear about more impactful issues and what we expect in the future, at least in the near term, for the region as a whole. So what it is, we're going to examine a few things. So COVID impacts and recovery, refining, new crude production on the scene, energy transition. And since I've spent a great deal of time historically focused on economics and demographics, I'm going to go ahead and speak about those things as well. But I'm not going to be able to cover everything here in such a short period of time. So I encourage you to ask your questions. And if we don't get to them, someone will get back to you ASAP. Also, I'm boring. So I want to give my colleagues here on the call some airtime as well. Mike is an expert on Refinitiv's product offerings. We'll be talking about how our solutions can meet challenges faced in this space. And of course, you, Tanisha, you're a brilliant representation of the top-notch analytical talent we have in the Americas office. And really in all Refinitiv offices we have spread across the globe. So how's that for opening comments?
So that will do. I know you prefer a more deductive reasoning type of approach. So why don't you start us off with the demographics and economic aspects that you mentioned earlier?
So you know me all too well, but let's look at some slides. Where the action is. So you know what? I know we have listeners today that aren't in the energy industry. So forgive me if you already know this, but those of us that have been don't give much credence to absolutes. And what I mean is this. I can't just throw up a Brent price chart and be content with showing you, where the price is today. There's obviously some information to be gleaned by, for example, comparing today's price with something historical or understanding how, backwardated or in contango a curve might be. But when it comes to energy people, we care about the relationships between different things, cracks, regional diffs, etc. So anyway, that's where Tanisha's deductive reference comes from. Now, we'll build on these two charts, but here's the point. The region's population is fairly concentrated in a limited number of locales. And as can be expected, except in the case of Haiti, where there's people, there's refined products demand. I also don't want to be misleading. In the countries that produce crude oil, this obviously isn't a balance. Guyana has no refining capacity, and we'll talk about Cuba's down the line. So, Caribbean demographics. So, if I flip over here to this next slide, here I have for you three other variables that work into our calculus. First, we so often, fairly or unfairly, evaluate the Caribbean along with the rest of Latin America. And as you can see here on the chart on the far left, the entire region's population has been growing. Over the last 10 years, we've added about 50 million people, but that growth has been largely concentrated in non-Caribbean locales. Let's talk about growth. Throw COVID out the window for a moment. Prior to all of this madness, one can turn on the financial news and hear regular reference to economic growth and how in the U.S. and China and wherever growth was slowing. Of course it was. I mean, issues aside, it's hard to grow for round number's sake, $1 trillion economy at 3% than it is to grow $1 billion economy 3%. But okay, so population growth doesn't necessarily follow, and there's some slowing of growth as a country becomes more developed. But let's look at the center chart. Growth in Latin America, the Caribbean, and the U.S. have been falling since 1960. All are still growing, but think for a moment about the stronger growth of Latin America with 600 million people versus the growth of the U.S. with 350-ish million people. In other words, Latin America is growing faster and thus has been the target of those that can export refined products. Perhaps more telling is the distribution of the population. We don't need to break it down into analyzing how many 7-year-olds live in Curacao, but the distribution of the population between ages 15 and 64 are who we are concerned with in regards to refined products demand. So over the last 20 years, that group has grown, but we have seen some flattening. And actually, if you look at the chart, some slight decline. Couple that with net migration. Unlike, for example, the U.S. has had some level of population growth from migration, Latin America and the Caribbean have had the opposite. More people leave the region than come in, and it's not the retirees exiting, it's the refined products demanders and their children, the future workforce. Now, obviously, not every person that leaves Latin America and the Caribbean head to the U.S., but to get in front of the question, does who is in control of the U.S. administration have an impact on Latin America and the Caribbean's net migration? Maybe. The World Bank puts out net migration numbers every 5 years, and the last data point was 2017. Then it was 2.6 million. And in 2012, it was 2.8 million. The U.S. numbers weren't all that different either. Farther back, the numbers are much larger, but I feel that we need to look at more recent history to decide how it will look in the near future. And by doing that, I think we would expect net migration to remain about the same. Okay, so one final point before moving forward. Studies have been conducted about the preferences of millennials. And those have shown that millennials don't put as much emphasis on owning their own vehicle or driving. Perhaps that changes with some COVID, but by and large, though the impact of these group preferences are more pronounced in the U.S., they tend to extend to other parts of the world as well. Thus, again, throwing COVID aside, the move of more people into working age in Latin America and the Caribbean doesn't necessarily translate to the continued refined products growth we would have historically expected. So, let's flip over here. So, COVID, what have you done? It's our guest of honor, COVID-19. We continue to hear about increasing coronavirus cases across the world, renewed lockdowns, etc. A couple of the largest centers here are the U.S. and Brazil. It's a country I cover often in our weekly podcast. But not to be caught up in the absolute number of cases hype. We talked about that before, guys. That's the bars in the area chart shown on the left. I'm more concerned with the infection rate, the line. So where the U.S. rate is 2.6%, which is not the worst in the world, by the way, the impact on the Caribbean has been less than 1%. I can see that it's growing. And for this webinar, it would be out of focus to go too deeply into mortality and recovery rates. So let me say this. From a direct impact perspective of the coronavirus, the Caribbean has fared better than many other places in the world. The same cannot be said, however, for economic impact. So, the chart on the right includes, again, both Latin America and the Caribbean. So yes, outsized economies like Brazil and Argentina and Mexico, et cetera, they have a greater impact on what is shown here. We have all the economic data you could ever want, and if you're interested to learn about that, Mike will have all the answers. What the chart on the right shows is direction. The Great Recession represented an almost 2% contraction for the region. But COVID brings about a much worse response to GDP growth, negative 8+%. I still believe the expectation for the world is to contract something like 5% this year. And shaving that much off the regional economy, again, means that growing from a lower level may take less economic effort than it did, for example, growing 1% between 2017 and 2018. But a nearly 4% growth expectation for 2021 as we roll into further lockdowns, seems optimistic at best. I'm not going to take it down to the Caribbean country level, but here's my generalized view of recovery. Those countries that are dependent on agriculture, they're going to recover faster than those whose primary economies are based on tourism. Which we may hit more when I talk about jet fuel and fuel oil. And those dependent on energy, which we'll discuss when I talk about refining.
Yeah, we'll definitely want to go into refining and products. But first, there's some regional hope when we think of crude oil production, correct?
Yes. So you're talking, of course, of Guyana. For those of us in the U.S., I know we have a lot of listeners here that are. Many don't typically think of Guyana as a Caribbean country, but it is considered so based on historical relationships with the region and with CARICOM, which is a full member. Since 2015, ExxonMobil and partners have made 15 discoveries offshore Guyana. And through these discoveries, the last time I checked, put the country at over 8 billion barrels of oil equivalent reserves. Given that my work in this industry has always been with Mexico just to the south, this means that Guyana's reserve base is larger than Mexico's. Still smaller than other regional producers. Venezuela, the world's largest reserves at 303 billion barrels, and more issues than any country should face. And Brazil at 13 billion barrels, but significant nonetheless. And, the crude quality here is great. 32.1 API and 0.51% sulfur. It rivals that of West African crude and gives U.S. Gulf Coast refiners flexibility when freight rates rise. But there's also interest from China and Europe as well. Since production began in December of last year, through our flows tool, we've seen this oil heading to all three regions. Now, the left chart shows forecasted production assumptions for the country. We've nearly achieved the 120,000 barrels per day figure for 2020. We may have actually already. And I'm confident that 2022 will get over 300,000 barrels per day. Because even in the face of COVID, crude production has continued forward to its projected goals. There's been the typical resource curse happenings that are expected with the country's development of its resource. Voting out of the president, accusations the best deal wasn't reached, etc. Items I've discussed in our podcast. But by and large, these issues have been somewhat muted. I'm willing to go ahead and attribute that to the coronavirus. Back in October of 2019, the IMF expected Guyana's GDP growth to be over 85% for 2020. That's instant wealth. The latest forecast is still very, very significant. Both lower oil prices and the global hit on demand, it's much more moderated. Time will tell how the new Guyanese oil industry shapes the political and social environment of the country. But as I said before, I still expect for production to continue to grow here. ExxonMobil, for one, is very invested there, and each earnings call has revealed the importance of the Guyana play. And since we're in the neighborhood, we're also watching Guyana's next-door neighbor, Suriname. Suriname production is now below 20,000 barrels per day. Whoop-de-doo. But the discoveries there, by much the same players as those in Guyana, tell me that within the near future, we'll be seeing these sub-20,000 figures higher. Let's turn to this next slide. I just want to turn for a minute to the only other two countries in the Caribbean that produce crude oil, Trinidad Tobago and Cuba. When we think of Trinidad Tobago, I think more of LNG exports. I've covered gas before in a previous life, but I'm not the person to get into world LNG market analysis. We have teams of people at Refinitiv that analyze the gas market. But I will say this. Despite all of the gas we now produce domestically in the U.S., and then, even though we have our own LNG exports and significant pipeline exports to Mexico, The U.S. still imports LNG from Trinidad Tobago. I mean, granted, that figure has fallen from just under 1.3 BCF a day in 2004 to 129 million cubic feet per day in 2019. So what about crude? Well, crude and NGLs production has collectively fallen since right before the Great Recession, from a max of 174,000 barrels per day in 2006 to 82,000 barrels per day last year. Exports, however, have been unaffected from a downside view and actually saw a dramatic increase early this year. We'll cover that later in this webinar, but the U.S., Malaysia, and sometimes Spain are generally the largest takers. Finally, the only other Caribbean country with crude production, Cuba. And after increasing some from the 1960s, it's been flat for about the last 20 years. We see some fuel oil exports come out of Cuba, but with 138,000 barrels per day refining capacity, that production's kept at home. And with that, Mike, I believe you have some material to add here.
Yeah, I appreciate that, Corey. Thank you so much. I think it's important to note some of the ways that you can interrogate the data through Refinitiv tools. Right now, we're looking at our oil flows module. In particular, we're looking at a focus on crude oil and related product exports coming out of the Caribbean. One of the things that's really nice about our solution is it's a holistic offer. So everything that you've been talking about, the statistics behind the GDP, news that's related to events in all of these countries, all contained in our ICON platform. One of the things that's crucial about the oil flows module is it's a part of the commodities fundamentals database. So what I've done here is selected those Caribbean exports, and on the next slide, we'll see what that looks like when pushed out to our interactive map. The interactive map is very powerful. Not only does it allow you to interrogate from a top-down, but also a bottom-up approach if you happen to know a vessel name or its IMO. It also includes refinery alerts, storage terminals, port zone and route analyzer, as well as weather overlays. You touched on metal and agriculture briefly. The map also has those overlays as well, but for the purpose of this conversation, wanted to keep everything focused on energy. I did have a quick question for you, Corey, if you don't mind, though. Last week, the IEA on Thursday in their monthly report expressed the opinion that oil demand is unlikely to get a significant boost, even though we've rolled out COVID-19 vaccines or soon to roll them out well until 2021. Can you speak to how that is impacting things in your perspective?
Yeah, we'll actually cover that a little bit more as we go through some of these slides, but definitely. So, oil response, we've seen the prices, run up a little bit just because of this news. But by and large, it's going to take a while for this vaccine to reach the masses. I mean, we'll obviously start with those that need it the most. So, you'll see some healthcare workers that receive it, which are on the front lines. You'll probably see some of the elderly. But, when it comes to that, right, it's kind of the same kind of discussion we had earlier about working age population. If it's going to the vulnerable, so say those that are retirees, well, refined products demands, kind of my baby here, we won't see as much of a response there. So yeah, I think that's probably appropriate. We won't see a lot of demand response for, maybe until the end of 2021. And that's without, second and third waves of COVID or whatever black swan we may experience in this near future.
So coming back to what we were talking about with Caribbean refining sounded definitely very interesting. But before we go on with that, would you like to talk some more about the refined products and what you see there?
Yeah, absolutely. So switching over here to our next slide, big picture, the most recent data we have on the region's demand broken out like the chart on the left. Middle distillates, diesel and jet fuel, about 33%, gasoline, 22%, et cetera. These data are from the EIA, which I'll acknowledge are probably not the most complete as an international source, and that are a bit behind the actuals. But you know what? Before moving on, I do want to give a shout out to the analysts at the EIA as well. I mean, we work with them through Refinitiv, but every time I've had a question, they've been very responsive and just top notch in their answers. The most recent example was when I submitted a question after hours one night. By the next morning, I had an answer. So for those I've communicated with in the past and those this year, thank you for all you do. Okay, moving on. So Remember when I was talking earlier about population, how we generally think of working age population, and as more enter the group, we can expect more in the way of refined products growth. That hasn't really been true in the Caribbean. In fact, refined products demand peaked in 2005, well before the Great Recession, during a time when working age additions were on the upswing. And it's been declining during a time when Latin America has experienced economic growth. So what's going on here? Flipping over the next slide. So just take a look at the left-hand chart. Refined products demand has been flattish to slightly growing since 2000, but for two significant areas. The U.S. Virgin Islands saw demand completely fall off right around this recession. But Puerto Rico has been squeezed as well. If you look at the middle chart, you can see why. Puerto Rico has been in an ongoing recession since what, 2006? And then the hurricanes. Since Puerto Ricans are U.S. citizens, we've continued to see more and more population loss to the mainland as trouble in the island. So economic and housing, stagnant wages, unemployment have just refused to subside. We'll talk more about the U.S. Virgin Islands when we talk about refining, because that's what's going on with the demand picture here, which is somewhat misleading. The refinery on St. Croix is obligated to report its activity, whereas product transfers from the U.S. mainland to the islands, they fall into a real gray area. Only interpad transfers in the lower 48 are required to be reported. So when the refinery is not in operation, data became a bit cloudy. There's still likely to have been a reduction in demand, perhaps not as strong as what we have shown here in the chart. And finally, before we move on, the far right chart is what we've experienced recently. As you can see, the U.S. is a significant supplier to the Caribbean. So historically, when the St. Croix refinery shut down and data reporting became less exacting, it gave room for a potential error in what the U.S. Virgin Islands refined products demand numbers actually were and are. But nevertheless, the overall refined products picture has been affected by COVID, but have actually held up pretty well. I'm not saying that imports weren't affected. During the height of the coronavirus, there was about an 18% year-over-year drop in April, so April 2019 to 20, and a 15% year-over-year drop in May. But as you can see from the 3-month moving average line, there's some seasonality and general erraticness in the imports anyway. But if we examine the marquee products, gasoline, diesel, and jet, we see about what we'd expect with the import demand picture. Gasoline was more affected during the height of the pandemic than was diesel, which is still used for power generation. The region doesn't import much in the way of jet fuel, but that, of course, came down as well. What I don't have shown here are LPGs. I spent a lot of time talking about Brazil, and what we saw earlier this year was record high LPG imports as more people were at home and, of course, cooking from home. We saw this phenomenon as well in the Caribbean, at least if we compare 2019 and 2020 to date. The average LPG imports to the region are just under 4 million barrels, but in March of this year, over 6 million barrels.
Well, that's very interesting. Over 6 million barrels, that's a big number. So there is a few refineries that are spread throughout the Caribbean. What's the story with the Caribbean refining?
Well, the story is hardship. This chart is a quick screenshot from Icon built with our partner IIR's data. I could have pulled this a number of different ways. This is a quick grab. It doesn't include the refinery in Suriname, and I'm not including any of the operations of St. Croix. It's just CDU capacity and utilization of a group of Caribbean refineries. But my point here is twofold. First, Caribbean refining was affected just like other regions by the coronavirus. Yes, there was the demand hit locally, but also refinery workers weren't magically protected from corona. They got it too, and that put a strain on operations. And globally, especially if you think about the U.S., when nimble refiners see demand get crushed, they normally move up their maintenance schedules. Well, with the inability of crews for turnaround, refinery maintenance was largely put off during the height of COVID. In the U.S. and there as well. So when things do recover, expect more in the way of unplanned maintenance. If you don't maintain a refinery, it breaks down. But globally, and also here in the Caribbean. Now, my second point is for those that have been in the industry for a while. Do you guys remember when there was over 1 million barrels per day of refining capacity in the Caribbean? Puerto Rico used to have, 5 refineries? Now, compare that to, say, U.S. refineries. The Caribbean just hasn't been the most lucrative place to make a refining buck. Asset after asset has been deemed uneconomic and shut down. Now, Mike, you have something for this?
Yeah, I think that's really an important point to note. And playing off of your thoughts related to the coronavirus, one of the things that we've really seen in the Caribbean is divergence away from what we expected at the beginning of the year. I think you would agree that IMO 2020 was going to be, or is expected to be, significant, both in maritime but across the refinery complex. And experience has shown that COVID has completely overwhelmed that. And as a consequence, while we have IMO 2020 coverage, I think that it's fair to say that both the supply overhang and demand destruction really have created a situation where IMO 2020 didn't necessarily come to the fore in the way it was expected. But I do like to highlight that not only does Refinitiv provide its own IMO 2020 coverage, but we also work with partners. You mentioned IR Energy for the capacity values we looked at a moment ago. In the screenshot of Icon we're looking at right now, it includes content from partners such as Platts and Argus as well. So aggregating a variety of content partners as well as doing our own proprietary research forecasting is a strength of Refinitiv, both in our Icon desktop as well as our data feeds, which are inclusive of Datascope Select and Point Connect for fundamental data. With that in mind, maybe we should take a look at refining a little bit more deeply. And I'm interested to talk about St. Croix when you get to that. Can we pick it up from there?
Yeah, absolutely. So that's definitely part of the IMO 2020 story. Couple more things here, though, like on the refining. So, yeah, no analysis necessary. So you're right. It's not fair to say no analysis necessary about Cuba. I mean, there are 4 refineries in Cuba, all Russian technology. And I believe that 3 of the 4 service ports more so than they do in your refining. Cuba has to import. It's obviously under embargo by the U.S. and trades with Venezuela when it can. Now, Cuba's ports are shallow, so anything coming in must be lightered. And fuel oil is important here, as the bulk of Cuban power gen comes from fuel oil. The refineries don't simply supply enough to support generation, which partially explains the rolling blackouts. So it comes into the country from Venezuela when it's able to be tracked as largely fuel oil. I don't think much changes here, other than if Biden comes in and improves relations with Cuba or with Venezuela.
So other than the proximity, what exactly does Venezuela have to do with the Caribbean?
Excellent question. So Transparency International puts out an annual corruption perceptions index, and Venezuela didn't rank dead last. That particular trophy goes to Somalia. It certainly didn't fare very well either. 173rd out of the 180 ranked. But again, you're right. I'm more concerned with Venezuelan influence than Caribbean. If you're not aware of the history here, after oil was discovered in the Maracaibo Basin, Venezuela started looking around for where to refine the production. Shell delivered with its construction of the Isla refinery in Curacao, which when it took first oil in 1918 was the largest refinery in the world. Now, things at the Isla refinery on the island weren't all peaches and cream over the years, and after operating the refinery for several years at a loss, Shell sold the refinery to the government. Then the government leased the refinery to PDVSA. The Isla refinery has a capacity of 335,000 barrels per day. It renders Curacao as a country with one of the highest per capita carbon emissions rates, but it is responsible for 8% of the island's GDP. For PDVSA, it was a critical piece of its operations. Now, when Venezuela allowed its domestic refineries to fall into disrepair, well, some of the gasoline and diesel shorts could be made up with the Isla production. The facility played a critical role in storing and shipping heavy crude to China and India, including for the benefit of the country's oil for loans agreements. And prior to the deep sanctions by the U.S., the facility imported U.S. light crude for refining and to use as cutter stock for Venezuelan heavy crude oil. Well, you know what? Deep government corruption and misdealings don't just hurt the countries that activities are occurring in. They often extend elsewhere. PDVSA was unable to renew its lease in the facility when it came up in December of last year, and RDK, the legal entity that is the owner of the refinery, struggled immensely to find a new operator. First, Curaçao looked to Chinese companies to operate the refinery. They pledged to invest over $5 billion to upgrade the facility. That didn't work out. Then a deal was signed with Klesch Group, which was going to invest, hundreds of millions into the facility. That hasn't really worked out either, though I understand that talks have been extended to this month. So now what is Curaçao doing with the facility and associated storage? Well, it's trying to invest to get the storage up to shape, and it's leased a space to SPS Drilling, which I'm hearing the agreement may have been terminated there as well, but ultimately has resorted to suing PDVSA for missed lease payments, unpaid storage fees, labor debts, and improper maintenance. Good luck. RDK recently seized Venezuelan oil stored at the facility. And Curaçao is not the only one of the ABC islands, Aruba, Bonaire, Curaçao. Islands part of the Netherlands that Venezuela has negatively affected. Bonaire hosts the Bonaire Petroleum Corporation, or BOPEC, which is a 10 million barrel tank farm owned by PDVSA. Now, even prior to the most recent severe U.S. sanctions on PDVSA, BOPEC, like other company assets, had fallen into disrepair. And just this August, the facility had deteriorated to the point of immediate environmental risk. And that sparked an order by local authorities to move oil stored in several tanks to safer storage. Venezuela has had dealings with Aruba as well. Now, as a matter of history, back in 2012, an American refining company, the then owner of Aruba's Sol refinery, one with 235,000 barrels per day capacity, shuttered it, unfavorable refinery economics. This closure came around the same time that Hess shuttered its PDVSA joint venture 350,000 barrel per day refinery at St. Croix, which Mike talked about earlier, and we'll get to in a minute. Now, this was the second time in Aruba refinery's history that had been shut down, the first by Exxon in 1985. By 2016, Citgo signed a long-term lease with Aruba for the facility and began preliminary work to rehab the refinery into a heavy crude upgrader. Now, this was being done to alleviate issues experienced by the Petropilar, Petrocedeño, and Petromonagas upgraders at Venezuela's Jose processing complex. By last year, however, Citgo and Aruba began negotiations to terminate that agreement. Okay. The agreement was finalized, and the Aruban government-run RDA has control of the facility. But since the agreement finalization, RDA has been searching for an operator for the facility or for storage or even alternative uses. Biofuels? I don't know. The location really did make sense for PDVSA storage, but given the situation in the world in Venezuela, no dice. So, what is RDA doing now? It's evaluating proposals that were submitted in July for the site. So what this means for these Caribbean assets is this. Venezuela historically had a bustling business in the Caribbean. But as the curtain started to close on its once robust oil industry, these assets have floundered just as much as those in the mainland Venezuela. As we move forward into reopening, their future is uncertain. But in the near term, say through 2021, I really don't expect the story to change much for the better.
So what does this mean for the quote-unquote the others?
Okay, so here's where Mike comes in is interested. Now I have the Trinidad and Tobago refinery because it's been in the news lately. It was economically shut down in 2018, so before the coronavirus, and since the refinery has been up for sale. Evidently, there have been some private equity bids, but a labor union-owned firm is going to purchase it before the deal fell apart. Now, we'll have to see where this goes, but given its non-economic nature in 2018, I don't know that it's going to be that economic in the near future. But yes, my final thoughts today on refining go to St. Croix. So I used to cover fuel oil, so the reinvigoration of the St. Croix refinery was going to be on the back of the IMO 2020 sulfur specification change that Mike talked about earlier. You guys remember that? I mean, as a complex refiner, you're going to either contribute to the making of VLSFO, very low sulfur fuel oil, or you're going to see VLSFO issues really take hold. So separation, the inability to fuel at different ports because of quality differences, et cetera. Everyone was going to switch, with that, if there would have been that. Everyone would have switched to MGO, marine gas oil. So at least for a while, maybe at least until all the scrubbers got installed, man, you're going to make some real money. Thanks a lot, COVID. I'm obviously not privy to the refinery economic calculations that rendered the St. Croix refinery attractive under the IMO 2020 scenario. But from the outset, it makes sense. I mean, it's complex. It has a coker, flexibility where to send product. Even though St. Croix is a U.S. territory, it's not subject to the Jones Act. And as an aside, when it comes to the Jones Act, so if you're not in the U.S., you don't necessarily know it. When you're shipping from U.S. port to U.S. port, you have to. There's some cabotage requirements and building requirements for ships and things like that they're built in the U.S. But anyway, when it comes to the Jones Act, U.S. territories are exempt from the act. But for Puerto Rico, it's exempt for passenger transport, but not for cargo. And of course, Hawaii as a state is fully subject to the act. So, aside from thriving in the way of ship fuel, U.S. East Coast refinery rationalization could be very well beneficial for St. Croix. I mean, we've seen some of that recently with PBF and some others on the East Coast, PES too. But that is, however, the startup and operation warrant the cost. Originally, it was supposed to cover a cost over $1 billion to get the refinery up and running. But as of June, that price was up to $2.7 billion. And the refinery has both crude supply and products marketing contracts with Fuses. BP was to supply crude to the refinery, but if it doesn't meet certain production targets by the end of 2020, BP can terminate that contract. This could certainly spell the end of this endeavor, especially given the second wave of COVID is upon us, and we're already seeing renewed lockdowns in the world. But that's the beauty of our data. So the tools that Mike showed earlier and that I talked about a little bit briefly earlier as well, we've seen an uptick in crude receipts in November. So perhaps the St. Croix story isn't over yet. Okay, guys.
Yeah, I think that's really important to note because I think there is a positive story writ large as we get through coronavirus and vaccines are rolled out. One of the things that we're best known for at Refinitiv, in addition to the research and forecast team of which you're a part, our analysts are widely awarded and renowned, but we also have access to Reuters News. They are the world's largest financial news organization. And with the audience that we have, I would expect a wide range of interest from people that may be trading, to people that are looking at hedging, to those that are looking at outside of the commodities industry, looking at it from perhaps equity investment perspective. So to that, Reuters News is included in our services. And I'd like to take a look at the next slide because it highlights one of the real key attributes of what we can do for our clients. So while we've been talking a lot about the data side of things, very quantitative, I think it's also important to recognize the primacy of our news organization and the news services that we can provide. What we're looking at is inclusive of the conversation specifically about St. Croix on the left column, and then most recently you can see a change in the leadership that they're making there. As I recall, there were some issues not only with COVID, but also they found some corrosion issues that led to increased delays and increased costs there. But I'm optimistic that Lime Tree Bay will be able to get that turned around and running. It's my understanding, as you said, that BP is making their decision in December, so we'll soon see the results of that. Likewise, in other good news, a little bit of an article on Elliott Management making an investment in Guyana. So the point here isn't so much about these individual news stories, although they're great news in and of themselves. I think it's important to highlight that we provide not only that second-to-second and minute-to-minute breaking news insight, but also provide daily, weekly, monthly, and special reports that enable our clients and users to have a holistic perspective on their markets, to take the pulse on a daily basis, but also to be able to step back from a little bit of that noise to make well-informed decisions faster. So with that, I really appreciate the time that you've shared with us today, Corey. And Tanisha, thank you very much for your time as well. Do you have any questions that the audience has put to us? Do you know?
So yes, we do have a few questions, which I'll be coming to. Before that, like we had mentioned before, if we don't get to all of your questions today, please, we will be answering them afterwards, so don't be disappointed about that. And moving on to the first question now. So Corey, the first question we have is for you. It has to do with green investment. What's your outlook on green investment in the Caribbean?
All right, guys. I figured this one was coming. And okay, energy transition. It's a very hot topic right now. And, that's actually still kind of interesting to me. Generally, when we face such a large recession, I mean, this one's larger than any of us have ever experienced. Thoughts shift to more, how are you going to get out of this? Those thoughts, right or wrong, they often put environmental concerns on the back burner. That really hasn't been the case this time. We do, however, tend to oversimplify the question. The oil industry is extremely complex. It's efficient. It's been built up over a very long period of time. Petroleum has a higher energy content than many alternatives, and it can be delivered to where it's needed relatively cheaply. It's an organized system. It's not just used in transportation. I mean, just think about it. We essentially use every part to either be consumed as a fuel or to be used in clothing or plastics or electronics or medical supplies. I mean, the list goes on. And I think that's where, for an example, Biden has a hard time of saying he'll end fracking. I mean, there's the end uses, but there's also some economies, which this is not really maybe his concern, but there's also some economies extraordinarily reliant on oil. I mean, and even in the U.S., I'm sorry, I'm getting off the Caribbean here, but even in the U.S., I mean, there are thousands upon thousands of people whose lives are tied to the oil industry. Also, saying that we can transition those affected to clean energy jobs is actually a bit shaky. I mean, even if it were possible, historically, careers in renewables, they paid considerably less than those in the oil industry. And again, looking purely to energy generation, the energy content issue, how many solar panels does it take to replace a nat gas-fired powered plant? And energy storage. The new kid in the block is hydrogen, and one of our industry partners is an expert on hydrogen storage. So, and according to him, storing hydrogen is very, very difficult. But okay, I get it. The question is about the Caribbean. There have been calls. People have identified the Caribbean as being, prime candidate for renewable energy investments. I think even Richard Branson from Virgin, all his businesses, is one of those people. But it largely has to do with power gen versus transportation fuels. And that's probably where it makes a lot more sense. You're retiring old fuel oil fired power plants is perhaps more possible when you live in a place where the sun shines most days of the year and not a lot of population, especially with such a sporadic and disjointed energy grid. Mike can absolutely step in here if he'd like as well. But this question also goes to a level of ESG investing. And Refinitiv has a lot of resources and analysis around this space. I've used it in some of the research I've done. I know the actuality, some energy companies in South America, since I spend a lot of my time focused there, actually rank highly compared to other companies in the region when it comes to ESG scores because of the respective green initiatives. Now, I don't know how Caribbean companies, organizations, sovereigns necessarily rank, but we probably have that data.
Yeah, absolutely, Corey. We have data both in our Icon desktop, in data feed capability, as well as other repositories where you're able to commingle data.
All right. So the next question that we have is, Corey, do you have any oil price forecast for at least 2021?
Well, yes and no. So it depends on whether you're looking for crude oil or products. And if you're interested in specific grades or the financials, if you're looking for short term, so what I mean by short term is monthly or long term, like annual prices. when it comes to prices, we assess. I don't even know how many. Mike or Tanisha may have that, but we assess swap prices and curves daily. Tanisha is actually involved a lot in the crude pricing, and I work with our Singapore and London teams to assess European and Asian middle distillate prices. But before any of you figuratively throw something at me, I know that forward curves have no predictive value. Our partners, Mike mentioned a couple of the partners we work with. I did as well. Our partners, a lot of them have price forecast, and get on the line with Mike and talk about how those partners interact with Icon and our products. And we have the Reuters poll for annual forecast. Now, the last time I looked at this poll, 2020 Brent was at a 49 handle. I think around 49.50. 2022 was something like 56. I know that if you look at producers here in the U.S. and their derivatives hedging strategies for 2021, you have a floor set for WTI at about 42.50. So yeah, imagine 250 spread. So maybe a Brent floor of 45. And you just had OPEC members softly agree with cut extensions to April of next year, but the greater OPEC plus talks are taking place in a couple of days. They were supposed to be today. They got moved. Now, if the agreement to keep the current cuts in place for Q1 2021 holds, that will, of course, support prices. Of course, Russia doesn't want to keep with the current cuts, and they don't need to. Well, they do, but they don't need to as much as some of the OPEC members. Have to see how that plays out. Now, from an individual crude products perspective, for the Western Hemisphere, outside of crude grades in the U.S. and Canada, we have pricing for Vasconia, medium sour out of Colombia. Not a forecast, we just have the pricing for it. And Castilla, heavy sour of Colombia. As for products, the Caribbean looks more to the U.S. Gulf close for pricing. So that was a roundabout way of saying, yes, we have some in the way of forecasting that come from partners and from polls. But I don't want to say that we have a comprehensive forecast for every crude grade out there in the world.
So the next question, I know we've already talked extensively about refining, but the next question pertains to refining. The question is, do you think there's more of a future for refineries in the Caribbean?
So my short and harsh answer is no. Take it from a Gestalt view of the Western Hemisphere or even global refining. We currently have too much refining capacity in the world by estimates of 5 million barrels per day. Some of that has closed with COVID, really in areas that needed to close, but there's still more to do. Planned capacity additions in the world in places where product demand is growing, think about Asia, is still greater than the projected demand growth. But if that gets built, it's going to be obviously new and better integrated to petchems and logistics. If there's overcapacity, then you maybe see products pushed out of those regions and taking less economical market share. We have that in the U.S. with products imports from Korea to the West Coast and products imports to the East Coast from Europe. That's kind of your straw man. So if you look at the U.S. Gulf Coast and Shell Convent being shuttered because Shell can't find a buyer. Shell was trying to sell the refinery, dock, storage, a lot of stuff. So it was a pretty complete deal. Here you're on the water. You have pipeline access to both crude and products, and of course, notoriously cheap natural gas. You don't have a coker. The same can be said of for Brazilian refining assets that Petrobras is looking to sell. Only you're in a better demand environment. So you have interest from outside entities there, say in Brazil. Maybe that's more of a means of influence. We often talk a lot about influence in South America and the Caribbean and Latin America. But anyway, the Caribbean, no for most of the refining there. So no crude advantage to really speak of, no natural gas. And something I kind of went into earlier, access to power is spotty. You also have the issue with labor. You don't have a lot of qualified labor force availability that you have, say, in the U.S. or other parts of Latin America. The outlook just kind of looks bleak. I'd say that, where refineries have been turned into storage areas, we'll see more of that. I mean, I think perhaps the St. Croix is maybe an outlier there. Maybe you see some hope for there since you have who's investing and how they got kind of set up. We'll have to see really on that. But in general, the Caribbean refining picture is not wonderful, unfortunately.
And as a follow-up to that, do you think there is any potential to use the Caribbean refining assets to produce biofuels like has happened anywhere else?
That's a good one too. To put it simply, if you have hydrotreating and some isomerization technology at refinery, it's conceivable that you can produce biodiesel. But there again, the same refinery issues remain, power crews, etc. I just don't know that you're going to find a lot of the feedstock that you can economically get to your Caribbean refinery there as well. I mean, we're facing that in the United States. There's been a lot of talk about turning West Coast refining, producing biofuels at some of these refineries that have shuttered. You kind of have to have a running refinery, say, for instance, in biodiesel, to be able to produce it alongside of that. That has been the best formula in the past. So, I mean, sure, I think there's possibility. I just don't know how probable that is.
All right. The next question. Thank you so much, Corey. The next question we have is for Mike. How can someone who is new to Refinitiv learn more about the desktop data feed and commingled market data solutions?
Sure, I appreciate that, Tanisha, and I appreciate the question as well. As I mentioned, Refinitiv offers a holistic suite of products from the individual user icon desktop to our Point Connect fundamental data feeds to real-time solutions for electron data feeds, as well as end-of-day solutions like Datascope Select. We also have a product called the Refinitiv Data Management Solution, which enables you to commingle not only our data, but your own data in order to provide insight to make decisions for investment, for trading, for hedging, to feed visualization systems such as Tableau or Power BI, to feed ETRM and CTRM systems, so that there's a lot that we can bring to the table, and we're eager to be of service to our audience today.
Thank you so much, Mike. Corey, there's another question for you. Where do you see the fuel oil market in 2021 in the region?
That's another great question. So it's been a minute since I've really paid a lot of strict attention to fuel oil. We have a person in our group by the name of Dean Bendelay that covers that, and you can certainly reach out to him as well. I think that it remains really about where it is now. So again, I'm saying that not really knowing the numbers off the top of my head, just because you still have a lot of fuel oil being used within the power gen space. Now, if the question goes to broader, say, bunkering and things like that, back when we were looking at, for example, IMO 2020, there was this thought, at least by some of us out there, that the traditional bunkering hubs and trade flows and things like that would change a little bit. So, right now, Singapore takes the cake, right? You have Singapore, you have some Fajar, you have China, and China's maybe taking a little market share from Singapore and things like that. But largely, if you think about just ship traffic, and it's hard for me being in this industry not to think about tankers all the time, but container ship is the big traffic. So a lot of the ship traffic, you swing around from Asian production spots and you go through Singapore, and that's where you bunker. There are some thoughts that maybe that changed a little bit. So maybe you'd see more bunkering in the U.S. Gulf Coast, which would, I guess change kind of shift the fuel oil market a little bit in the Caribbean itself, conceivably. But for me, I just don't know that it changes that much, and I just say that because you're not going to see that relocation of bunkering hubs, and you're still going to continue on, at least for this kind of immediate future, with fuel oil being used in power gen.
All right, thank you. And the next question we have deals with the refined products. So do you have an estimate of when the what the St. Croix refined products production will be in 2021?
I do not, and I think that has to do with more around some of the issues we discussed earlier with them being able to pick up meet their whatever goals they have as far as their operating goals, and whether they continue on with some of their advantaged agreements that they have now with feedstock procurement and even with the marketing side. So, I think I have BP as well. I might know this answer, but is supposed to be marketing the products off the refinery. I don't. We may have some information there. Mike might have some information there about, what that looks like, or a source that we have working through Refinitiv that would know that. I don't off the top of my head know necessarily what the forecast would be for production. I think it really largely depends on, kind of a second wave of COVID and how those operational startup goals are met, if they're met.
All right, thank you so much for this. This concludes our Q&A session. As we had mentioned before, if you have any follow-up questions, you can reach out to us. We have our emails and LinkedIn's linked in the description box. Thank you so much, Corey and Michael, for taking out time to do this webinar with us today. And as we said in the beginning, we will be emailing the recording of the webinar as well as a slide deck to all the registrants and attendees. And after this, you will see a survey pop up shortly. So if you could please complete the survey and give us your thoughts, we'd love your feedback. Thank you so much, and stay tuned for future webcasts from the Refinitiv team, and have a great day ahead.
Thank you, everyone.